Good morning, traders. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and this month we are talking about robotics and artificial intelligence with our partners over at Global X for our Thematic and ETF investing series. And joining me is Jay Jacobs. He's the Director of Research over at Global X. Jay, thank you as always for joining us at the market site. Now, this particular ETF, aptly named BOTZ, sounds really interesting. Tell us how it's composed.
Sure. So we were really excited about the robotics and artificial intelligence theme. We just think it's really kind of at this J part of the curve where it's really going to start to accelerate as a technology and really start to expand across many sectors in terms of what's being affected by robotics and artificial intelligence. So the way that we define it is really these four different categories. There's traditional industrial automation. That's really when you think about robots, building cars in a manufacturing site. There's non-industrial robots. This is more unusual applications of robotics, such as surgery. Surgical robots are becoming really popular. The third category is unmanned vehicles and drones. And the fourth category is artificial intelligence. So companies that are really sort of more on the software side of developing the intelligence that are going to be powering robots going forward.
And how's the investing community reacted to this? Is there interest in this particular fund?
There's a lot of interest. So we launched this fund less than a year ago, and we've already seen about $150 million come into the fund. So it's been really taking off. I think part of it is timing. It's really kind of newsworthy right now as we think about some of the big tech leaders in the space and how they're incorporating robotics and artificial intelligence into their processes, but also the technology is really just starting to take off. It's been around for a surprisingly long amount of time, really since the 70s, but now is when robotics is getting smarter.
Right. It's really interesting you mentioned the J curve and robotics since the 70s. I was actually just doing something for school around that, and they were saying that things that you are using now were actually in development 30 to 40 years ago. So if you can only imagine what we're going to be using 40 years from now and what they're developing today, I just think the movement is going to be so rapid along that curve.
Exactly. I mean, when you look at the 70s and the 80s, they had gotten pretty good at making machines that could pick up a piece of metal here and put it down here. They really kind of optimized around that and it made factories more efficient, but it's kind of limiting because what we really start to see is, look at package sorting facilities. It's not as simple as taking a package from here and putting it here. They have to identify what kind of package it is, where it should go, what bucket it should go into. Is it going to be sent out tomorrow? Is it a ground shipment? There's a lot more components that are going into it. 70s and 80s robotics was not capable of that, but with the advent of artificial intelligence and smarter robots that can really think and feel and process their environment, that's actually becoming pretty easy to execute on.
Well, we also didn't have the data collection tools and analysis that we have now as well.
Exactly. Yeah, it's really kind of part of a bigger ecosystem. Right. So there's the mechanics behind it, there's the software behind it, sensors, microprocessors attached to these robots are really crucial in making them smarter because a robot needs to know its surroundings. I mean, think about a self-driving car. That's exactly what it's doing. It's basically creating a 3D model within its computer mind to figure out where it should go. That's kind of one of the new technologies that's coming into this space.
Well, let's talk about the investment process over at Global X, whether it's the Millennial Fund or the Robotics and AI. Is it all driven on fundamental analysis, or do you incorporate multiple disciplines into stock selection? How long are you holding these particular stocks?
We're really thinking about this as an access product. So we're not trying to go into the robotics space and say this is a better robotics company, this is a worse robotics company. What we want to do is provide exposure to the whole space. What makes that a little bit tricky is there's no, people talk about GIC sectors, the global industry classification system. That is really good at deciphering what's a financial company, what's an industrial company, what's a consumer staple company. It does not have a carve out for robotics. So we do a little bit of bottoms up analysis to figure out which are these companies involved in robotics. But once we pick them, we're not trying to choose which is the better one, which is the worst one. We want to have access to the whole space because we think, will there be winners? Yes. Will there be losers? Yes. But we think as a whole, this theme is really going to emerge in a pretty powerful way. So trying to avoid stock picking, more kind of giving exposure to the space.
Right. And out of all the funds that you have over at Global X, which one is the most exciting? Do you think this has the most momentum behind it?
Most momentum behind it is BOTZ, for sure. The way that we've seen the market react to it, the types of questions we're getting from clients, that is really kind of in the limelight right now. But we're also seeing a lot of interest in things like lithium, as well as the Internet of Things. And what's cool about these thematic funds is they're not really happening in isolation. Robotics is powering self-driving cars right now. That's like one of the main technologies behind it. But also lithium is happening at the same time. Batteries are starting to power cars as well. That's a huge part of the self-driving car phase because it's actually a lot easier to charge a car with lithium batteries than to refill it with fuel in an automated way.
So there's certain stocks that could be in multiple ETFs.
There's stocks that could be in multiple ETFs, but also we just like to think of these ETFs kind of pairing together well. It's kind of like, pairing together wine, right? Wine and food that goes well together. We think bots and artificial intelligence goes very well with lithium because they're emerging at the same time for a lot of the same reasons. A lot of those robots are being powered by batteries.
All right. Well, thank you very much, Jay, for joining us at the Market Site as always. And Twitter traders, thank you very much for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.